Hello, this is Alex Kaczmarek for the FXEdge.com, and this is your free daily Forex video for October 15th, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, folks, down 10,000 is the big story, and analysts are still questioning the recovery. So what we're looking for is what kind of action we're going to see tomorrow now that the psychological level has been pierced. Euro is aiming at the 150 level. Sterling is still hanging in there in the middle of the range. Dollar's losing more ground against Swissy, Loonie, and the yen. And one important note I want to mention about the 10,000 point level on the Dow is that it's not even a 50% retracement since hitting its low back in March. The 50% retracement level is just under 10,500, and the 68.2% retracement level is just under 11,500. So most importantly, we expect the flow of money towards higher yielding markets continue to provide the guidance for the FX market. And this is directly related to equities. We're going to see a shift as soon as risk aversion takes place once again. Meaning that as soon as traders and investment houses are going to start pulling their money out of those higher yielding currencies, they're going to come out of the equity markets, they're going to come out of the US equity market, the dollar is going to gain strength, and that is what we are expecting on the next possible downturn in the economy. We don't think this recovery is going to continue at its pace. Once the Fed starts pulling money, perhaps raising interest rates, that should help the dollar, and that should really, I don't want to say pull the plug out of the market because the Fed won't allow that, but it's definitely going to come back and sooner or later going to bite everybody that is trying to go in. Now, there's a lot of talk about whether or not people are trying to jump into the market now that it's pierced the 10,000 point level, or if people are going to start taking profits at the 10,000 level. So what we're expecting is profit taking between 10 and 10.5, and hopefully that's what's going to cause the dollar rally over the next 2 months before the end of the year. Okay, folks, let's get started. Let's take a look at the support and resistance levels. Euro dollar now trading at 149.30. First level of support could be found at 148.80, followed by 148.50. Below that will be 148, 147.50, and 146.80. First level of resistance is going to be at 150, followed by 149.50, followed by 150 even. Above that, it's going to be open water. We expect it to continue running, perhaps up into the 155, even the 160 level once again. But that's really a worst case scenario at this point. People are talking about the euro or the dollar losing another 20 to 30%. We think that's possible, yet unrealistic at this time. As again, we're expecting risk aversion to come back into the market. A first level of support can be found at 148.80. We already covered this: 148.80, 148.50, 148, 147.50, and 146.80. Pound dollar currently trading at 160 even, right in there, right in that red line. First level of resistance can be found at 161.20, 61.50, and 62. Above that will be 63.50. First level of support could now be found at 158. Below that will be 157, 155.80, 155 follow, and level number 5 will be 153.30. Dollar Swiss currently trading at 101.43. We expected this pair to continue dropping. 101.30 was our level of support that we drew today. That was yesterday's low. Below that, we'll see one even. First level of resistance is going to be at 102, 101.90, or 102 level, right in between. Above that, we'll see 102.40, 103.21, or 103.20, 103.50, and 103.80. So once again, we really don't anticipate the 101.90 to stand in the way, so we'll delete that. So we'll just call this the 102 level. 102, 102.40, 103.20, 103.50, and 103.80. Dollar yen If the dollar continues to lose ground against the majors, we are anticipating the yen to continue getting better back to the 88.20 level. Perhaps 87.12 is next, and then 85. What we don't like here is we clearly saw a downtrend. We stalled near the 88.20 level, and now we're possibly setting a higher pivot low. That's not good if we want this pair to continue heading lower. One other thing I'd like to point out, excuse me, one second, is a close above 99 is going to signal perhaps a dollar bull run. And what we're going to do is we actually have profit. We're currently in profit on one of our trades in our members section. And we're going to take profit at the 90 level. Or excuse me, only if the market closes above 90. That's very important. If the market closes above 90, we're willing to take profit off the table. And what we'll do then is we'll cover that on tomorrow's video in the members section. Moving on, first level of support is going to be found at 88.80, followed by 88.20, and then 87.12. Below that will be 85. First level of resistance is 90.20. Excuse me. Well, first level of resistance could technically be 89.50, but that's a very small level. It might come in detail in the future, but right now we're going to leave 89.50 out of the way. 90.20 is the first level of resistance. 90.80 follows. 92 is above that. And finally, we have 92.50 and 93.20. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 15th, 2009. Until tomorrow, good luck trading.